Good evening, everybody. Just reading through some of the comments. We're starting to get freezing rain here in Pittsburgh. And Darren, I used to know so many jokes. Now I just can't pull one up. I'm usually a topic jokester, meaning when somebody says something in a particular topic, then I can tell a joke. I always like the one where the minister knocks on little Johnny's door. And little Johnny opens the door, and the minister says, "Well, Johnny, it's your mother here." And he goes, "Well, she's out back making love to a billy goat." And the minister says, "Well, Johnny, doesn't that upset your dad?" And he goes, "Nah." All right. Okay, we're kind of going to start this uh, off with a kind of a prelude of what's going to go on this weekend, but this is all kind of built into what we look for every day, and that's trying to identify pattern breakouts. So for those of you, Mike, I can't always hit the right crowds at the right time. For those of you that are going to be in where it's cold and rainy and snowy this weekend, you probably want to come and join us in our power candle pattern training. That's going to be a full day versus our mini day that we did a few weeks ago. Okay. So this is going to be a good, comfortable day to sit there and see what the steps are to visually analyze what's happening going through the steps. And so my definition of a power signal or pattern is not one that only is moving in the right direction, but moving in the right direction with great possible big price moves. Those are obviously what we're all looking for. They occur. Where most people just don't happen to be in them at the right time. So we're going to go through the different setups that tells us, but at least we're going to be in a profitable trade. And then occasionally we get that big blast that can help your account for the whole year. So such as a fry pan bottom, when it breaks out over here, we at least expect a good up move, but sometimes you get that type of move where you can make huge profits very quickly. So anytime we're trying to identify that strong signal, we also have to analyze what the surroundings are. And the first analysis is, what is the market doing? Are we bottoming? Whoops, I'm doing it over here on the wrong screen. Are we bottoming out and heading up? Are we heading down? What are our stochastics doing? So obviously, if we're looking for a bullish trade, we don't want to be looking for a bullish trade when the market's in this mode. We want to look for that big bearish trade to the downside. So we can always get a much stronger feel for what's going on in our market trend based upon if we see channels, but mostly if we can see candlestick sell signals that tell us which direction. And obviously, the T line is a very strong part of that analysis. So let's just take a look. Here are some of the things that you can look at and get a much better feel when you're looking at a candlestick chart versus any other chart we could see where the basing was occurring. So this is where we put all the probabilities in our favor. One, anytime we're in the oversold area, that means we want to be a little bit more cognizant of whether we're starting to get some bullish signals. Or the other way to look at it is, we start seeing bullish signals, is it confirming that we're in the oversold area? Joey, that's what we're all looking for, is that big I'm going to find the fact that goes home for me and then stays up and supports me like everybody else. Well, Joey, I'm still looking for those. So here's some simple analysis factors that we can build into our analysis when we're looking at candlestick charts. When we're seeing the possible reversal signal, where did this reversal actually occur? When they closed it above the T-line. Where was our next likely target? Probably the 50-day moving average. Now here's something that you can easily put in your memory bank, that if you're in an uptrend, and there's enough strength in that uptrend to trade back below the open of the last candle, that tells you, yep, the bears are taking control. My voice keeps cutting in and out. Is that happening for everybody, or is it me just hemming and hawing? Gary, there's up in your right-hand corner, there's a red X with a circle, or in a circle. You might click on that and then come right back in and see if you can get a better connection. So through the years, I've discovered that anytime you see that selling that came back down through the previous day's open, that's a good indication that the bears are starting to take control. Secondly, if you can see they're doing it right at a level that everybody else is seeing, like the 50-day moving average, or everybody else is watching, that's more evidence that that's where the sellers started taking control. Now we add that to our analysis when we can go right to the NASDAQ. The NASDAQ did a little hanging man. Wasn't quite in the overbought area. However, because of the Facebook news yesterday, or after the close yesterday, that brought down the whole market. Now, was that just a knee-jerk reaction, or was that something that was telling you investor sentiment was starting to change to the south again? Well, we can see where it closed today. Obviously well below the T-line after gapping down. Remember what our T-line rule is. If you see a sell signal and a close below the T-line, you've got to pretty much calculate that the probabilities are tremendously in your favor that the downtrend is in progress. Now, there's a caveat to that today, because what killed the market today was Facebook being down over the 26%. I thought they said it was like $2.3 billion loss in their equity. Well, today, after the close, Amazon came out with earnings, and after hours, it actually hit the 50-day moving average. Now, the last we looked at it, it was down here, and I don't know where it is now. I can go look. Does anybody know where Amazon's trading right now? It was starting to pull back. Up 400. Okay, 31.73. So it's somewhere, yeah, still right in this range. Okay. Joey, but it's not the difference between the two. It's what it does to investor sentiment in general. That might pop things up. Snap also had strong earnings. However, With the market closing below the T-line, we have to assume that the bearish investor sentiment is in control until we see otherwise. Yeah, so the futures are probably up, but the question will be, will they be up there tomorrow morning? So this is the one factor that everybody kind of loses in their evaluation. There's been so many times, or there should be so many times, where you see the futures are up big after hours when you're in a downtrend, and the next morning when you get up and it's about 10 minutes before the market opens, they're way down. So what happens in the evening or at night doesn't mean a hill of beans until you get to about 10 minutes before the market opens the next day. So that's going to be one factor. Now, here's what is very prevalent in the markets. There's these tons of bearish J-hook patterns setting up. So that also makes for a very, you got the non-farm payroll or employment numbers coming out tomorrow. But if we know what a bearish J-hook pattern looks like a bearish J-hook, we have a pretty good idea what to do if we see the markets open lower tomorrow and something like this one is opening lower. But what we really want to do is add the probability factors. There's our bearish left-right combo. Now, if you've been around for a while, you know that if you're in the overbought area, and the T-line rule is that you can stay long until you see a sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So at this point, if you were long, you could go, you close out the position. Again, the bearish left-right combo is a doji followed by a bearish engulfing signal. You don't need to wait for confirmation because it's such a strong reversal signal that the probabilities are extremely strong the downtrend is going to start. Now you got the same thing right here. Look at your bearish left-right combo. Failure at the 50 and a close back below the T-line, kind of an evening star signal. And today they did a doji. So when you look at all that, this is what we call 2+2 analysis, where you could put as many things as you can on one visual glance. Evening star signal, failure at the 50, close below the T-line, and a doji. If this opens lower tomorrow, Vasu, every time we do an evening session, it's always recorded. That's why Jim, the recording guy, is in here. If this opens lower tomorrow, what do we got going on? We've got a Dagwood, which is the opposite of the McMuffin, which is basically an evening star signal followed by a doji sandwich, or your evening sandwich, or your Dagwood. What does this imply with a strong degree of probability? Wave 1, wave 2, going into wave 3, wave 3 being the same magnitude as wave 1. So for clarification, you're not allowed to use words that big in here. If the overall market is down, we look for bearish trades. Yes. And not just bearish trades. This is, again, kind of our promo going into the for this weekend session. Obviously, if you think the market is going down, you want to find bearish trades, which there will be plenty of bearish trades. So what we're looking for is the strongest bearish trades. Going into that classification of, you would definitely want to make hay while the sun shines, or you definitely want to be moving in the direction with much greater force than just a downtrending stock. The T-line. What is your T-line? This is the 8 exponential moving average, the black line right here. John, this is one of the most powerful influences or trend indicators in conjunction with candlestick signals. So if you just kind of walk through what the definition of a candlestick signal is, it's the graphic depiction of what's going on in investor sentiment, which is usually very accurate. It's not a conjecture what's going on in investor sentiment. It's the actual formation of people making their buy and sell decisions. The T line acts like a natural support and resistance level of human nature, kind of with Fibonacci characteristics. So here's the most powerful combination that I have come across in 40 years of trading, that if you see candlestick buy signal and a close above the T line, that's telling you there's definitely a change of investor sentiment. If you see a candlestick sell signal and a close below the T line, there's definitely a change of investor sentiment. Again, with that caveat that the further away you move from the T line, the higher the probability it's going to come back and test it, which is that much more credence for taking profits when you see a sell signal in the overbought area. The market is the market factoring in the U.S. troops deployment to Eastern Europe. Daryl, we don't know, and we don't care. We're not trying to analyze why the market is moving. All we're trying to do is analyze what the market is doing and then taking advantage of that information. We can see it much more clearly based upon candlestick signals. Do you short HLI immediately if it opens lower, even if the market is up? No, not if the market is up. If the market is up, and we will do another session, that's another session. We're going to be doing one on stops in the members area here pretty soon. We're going to be doing another one on option spreads, how to use them effectively, both credit spreads and debit spreads. And then I would do another one on your entry strategies. So, yes, if the market is up and this opens lower tomorrow, I'd get ready to short it, but I'd wait to see what it's doing because the market is up. Now, if it opens higher and the market is lower, we'll watch to see if they start selling it off. If they come back down through that doji, yes, then I start shorting it. Now, if the market is up and this opens up and trades positive, obviously we're not going to short it. I need an automatic trader program each time the price crosses down to the T line. Sell, sell, sell. There you go. It is one of the Fibonacci numbers. Yes, so I've got on here, the blue line is the 50-day simple moving average. The red line, which is not on this chart, is the 200-day simple moving average. Those are on here because every major money manager in the world uses those moving averages to make their decisions. We don't have them on here to make our decisions. We have them on here to see what everybody else's decisions are at those levels, which the graphics, the candlesticks will show us. The 34 is this little gray line. That works reasonably well. When I say reasonably well, it works well enough to have it on your chart. So here's one of the great benefits of candlesticks. We know they work, or we wouldn't be looking at them 400 years later. Now we can add something onto our charts that can enhance the probabilities of analyzing that a price move is moving in the right direction. And if somebody says put the XYZ indicator on, it works. You put it on and it doesn't help you any, take it back off. We want to keep our charts as clear as possible using the indicators that work most effectively, because the main criteria for any analysis is the signals themselves. I could take everything else off this chart and just trade off the candlestick signals, or I could take everything off this chart except for the T line and trade extremely effectively. 18, I hope I said that right. No, I don't have to consider volume because I've already sorted my, or created my trading universe from the, say, the 11,000 trading entities out there. I use all stocks that trade more than 200,000 shares a day. So I've already cut out my, or made that part of my criteria. Obviously, I don't want to be trading a $5 stock that only trades 90,000 shares a day because you won't be able to get in and out of it. Now, the only time volume becomes another little added feature is if you get near a reversal. And let's say, for example, on this day or this day there was a huge volume spike. Yeah, you use that as added evidence that there's been a change of ownership at those levels. So everything is baked into the candlestick signal, exactly. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. You don't have to be a fundamental analyst. You don't even have to be a technical analyst. All you have to do is learn out of the 50 or 60 signals. I tell people there's 12 major signals, 6 longs and 6 shorts. They will produce more trades. They will produce 99.9% of all the trades that you're going to be concerned with. Not only do they produce the reversal signals and patterns, but they're the ones that do the best indications of a reversal. So I tell people don't clutter up your mental capacity by trying to learn all 50 or 60, which is what I did when I first came across candlesticks. As I kept looking through charts and analyzing when the reversals occurred through the years, and it didn't take very long, through the first couple of months, I realized there was only about 12 that you really needed to learn. The rest of them you didn't see often enough. So anyways, that was a long, Darren, that was a long answer to say yes. Everybody's decisions, whether they're buying or selling based upon any reason, fundamentals, news, anything, is built into the signal already. So there was a question, I think. Somebody says, is it too late to short? No. Oh, no, it hasn't gone down that much. Look at what the percentage move was from here. I'm going to be, as a matter of fact, this will be one of our recommendations to go short tonight. I've already got a star next to this. Because if this opens lower tomorrow, what can we assume? Now, this is, again, based upon the markets, the pre-market futures showing the markets are going to open lower. We can assume that we're going to have a bearish doji sandwich where this candle is probably going to be the same magnitude as this candle, which means our wave 3 is going to be starting. Shut out the news, yes. Joey, that kind of leads me to another investment rule of thumb. There's approximately 15, 18 excellent, what we call top rank signals and patterns. They include your best friend, your doji followed by a gap up, or your your left-right combos, either left or bullish or bearish. Fry pan bottom breakouts. So a lot of people will say, well, man, that's a lot to try to learn. My answer to that is you learn 3 or 4. You don't disregard the others. You try to learn them, but you learn 3 or 4 right down to the hilt so that you are an expert in those 3 or 4 patterns so that you understand when they work, why they work, and how long they continue to work using the confirming indicators. If you become an expert at knowing what happens in investor sentiment using those signals and patterns, now you're not at the mercy of what the talking heads are telling you, what investment advisors are telling you. You can see exactly what's happening in those price movements yourself. You don't have to depend on anybody else. So all these patterns right here are very recognizable, very J-hook patterns. If Roku opens lower tomorrow, breaking this level, we can pretty much assume that A bearish J-hook pattern wave 3 is in progress. On the bullish side, this is what we're going to be going into on Saturday, is if we can recognize a reversal, stochastic's coming up, and there's our trend kicker signal. Remember, a trend kicker signal is a kicker signal occurs at the reversal area. A trend kicker signal occurs during the trend. And notice what they did. They opened here, closed here, dark candle. The next day they opened it positive and went positive. So not only do you have a trend kicker signal, you've got a trend kicker signal that went through the 50 that everybody and their brother is watching. This is probably got a high probability of continuing higher. Does the T-line work for the Forex and commodity charts? Mark, again, the definition of a candlestick signal is it's the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether it's stocks, bonds, currencies, commodities, tulip bulbs. Anything that has fear and greed in it, the candlestick charts will accurately tell you what's going on in investor sentiment. What a whipsaw market if it is up tomorrow, yes, but we don't know that yet. Remember, the futures are up after hours. It's not the institutions or the big traders coming in and buying futures after hours because the volume is much lighter. We want to see what exactly is going on 10 minutes before the market opens tomorrow. Bob, that's positions. That's another factor. Everything that I've done through the years, because I was the worst investor in the world, was trying to keep my emotions out of my trading. And part of that was the money management of how many positions I have on at any one time, and that each one of those positions are equal dollar amount. So each one is just a unit of my portfolio. That way, I'm not hoping that my favorite position's going up. I'm analyzing whether my a unit of my portfolio is working or not. James, the T-line works. This is a daily chart. It works just as well on a 1-minute chart as it does a monthly chart. Yep, so whatever time frame you're using, this could be a 5-minute chart, a 10-minute chart, a weekly chart. It's all the same. It's the 8 exponential moving average. Oh, no, I can't be. Sandy's got me on the keto diet, and I'm not allowed to eat rice. Yeah, so very simple rules. If I was shorting this, because we're below the T-line, where would I not want, if I shorted it on weakness, where would I not want to see it close? I wouldn't want to see it close back up above the T-line because of the T-line rule statistic. But as long as you're below the T-line, the probabilities are extremely strong you're in a downtrend. If it opened here, tomorrow the T-line will probably be down in this range. If it opened here and closed back up above the T-line, what's it telling me? They aren't selling, they're supporting here. Close out your short positions. So here's another factor that a lot of people kind of get screwed up in their own head, because I did, so I figure everybody else does. When I first started using candlesticks, I kept thinking, man, I know in commodity trading that if you can make 50% of your trades correct, you're going to make a fortune. And here I'm seeing about 70% of my trades correct using candlesticks. I should be making a fortune. Well, the other side of that coin was, if your 70% of your trades are correct, 30% of your trades aren't going to work. Not because you're misreading the charts or you're stupid. I'm saying to myself because you're stupid. It's because statistically 30% of the trades probably won't work. So the other aspect of candlestick analysis is it identifies when to be in a trade. It also shows you how to stay in a trade. until you see a reversal. But it also tells you if you get into a trade when to get right back out. Everybody tells you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. With candlestick analysis, it's just common sense. And that was the big factor that kept slapping me in the side of the head when I was learning candlesticks. Everything I analyzed on a candlestick chart said, yeah, this makes sense. Or I knew this, I just never saw it in a graphic depiction before. Is there a set of criteria you use in a scanner? I don't know what a FizViz is. To find these setups. Brian, I think a lot of our formulas are already on a lot of the brokerage firms. I know it's our formulas are at TC 2000. They're at Metastock as far as scanning softwares. I'm pretty. They're at Thinkorswim. TradeStation. We were working on it with them, but they had to do some excessive work with the SEC on something else, so that's been delayed. I know Ninja Trader has all our formulas, so they're out there, and it's not that difficult to apply them to any one of your whoever you're trading through. The green line. The little green line is the 3T line. It works in conjunction with the T line. And two factors. One, if it acts as a confirming indicator. Notice how it came up here and it was right at the T line and didn't confirm. That was just another subtle indication that, yeah, this trade, if you were buying right in here, wasn't working. And the other side of it is if you start moving too far away from the T line, then the 3T line becomes a greater factor. Mod just failed at the blue line on the same setup on this chart. Mod. Mod just failed at the blue line on the same setup. Bill, I don't know what that means. So we wait for it to close the gap before entering a trade. Oh, meaning on this one? No. There's always the adage that all gaps get filled. It may not get filled for 2 weeks, 2 months, or 2 years. We're buying this trade. Once that trade ends, we'll move on to something else. That may become a target on the downside sometime out in the future. Today's large drop was due to big drop in Facebook. Markets will probably recover. Have no idea, Harry. For years, I've heard all the talking heads when they say, what do you think the market's going to do? No, it's going to be up 5%, 7%, blah, blah, blah. Nobody knows. The best thing to do is analyze what the market is doing. And that's exactly what the candlestick charts tell us. So this is what we want to analyze. We want to see what happens after Amazon's big price move. That may not be enough to reverse the market. It might be enough to bring it up, but it still wouldn't tell us which way the market's going. Pretty choppy. So not only does the market indexes tell us when we want to be, long, be short. Sometimes it tells you we don't want to be either, or we want to be both, long and short. And that's a benefit of scanning using candlestick scans, is because if the market's moving sideways, there's probably going to be 5 good shorts and there's probably going to be 5 good longs. Rice cauliflower, all right. You can buy a stock and buy with a buy signal and close above the T line, even if the market, oh yeah. But so if I've got 10 positions on and I think the market's going down, more than likely through my scans, obviously I want to go with the flow. Maybe I have 8 short positions on and 2 long positions. Because in any market direction, there's still going to be good long stocks if in a downtrend, and there's still going to be good short positions in an uptrend. Having some of both in there just kind of acts as a kind of a little bit of a hedge that if things turn around quickly, at least your short positions will be working if you were thinking you're going to be in an uptrend. John, the membership, yes, sir, we've got all the information on our website, number one. Number two, the membership to the website is, we have a chat room that's open every day during market hours, even before and after market hours. We've got a couple hundred people in there with enough people that know what they're doing that you get 2 benefits. One, they're identifying good chart setups so that you always have a supply of good trades, number one. And number two, if you're in the learning process, you can simply ask a question, say, I'm looking at XYZ, is that a pattern? You're going to have people help you say, yeah, that's a bullish engulfing signal, or you might want to wait until it actually closes above the T line. You get a lot faster expediting learning process, being able to confer with people all day long. I always tell people, when I first learned candlesticks, I didn't have anybody to go to get a second opinion. Every time I needed a second opinion, when I went to the doctor, I'd say, what's wrong with me? He goes, you're fat. And I said, well, I think I want a second opinion. He goes, all right, you're ugly too. So the membership includes the chat rooms. We have a session for members on Monday nights. On Tuesday, Wednesday nights, we'll usually have a special session, whether it's on stop losses, on entry and exit strategies, things that will be directly related to the benefits of candlestick signals. I put out 2 or 3 stock picks every day, not so that you have stock picks, but it's done in a 2-minute video telling you which way we think the market's going based upon the signals. And here's a couple ideas to either go long or to go short. Not, again, so that you have picks, but so you can see what the rationale or the learning process is improved by seeing why those picks were put in place. Interactive brokers, Brian, I'll have to check with Pat to see if they are using some of our formulas. And the formulas aren't that difficult. If you can say the signal, like a bullish engulfing signal, opens below the previous day's close and closes above the previous day's open, if there's not already a preset formula, you can write the formula very simply. Okay. The trigger changed in the stochastics before the candles. Do you use the candles? No. The number one, Brian, the number one criteria is the signals. Now, more than likely, the stochastics aren't going to change because the stochastic is going to change based upon the candlestick formations. Trade view, I'll have to check, Mark, with Pat. Also, I thought they did. Okay, let me make sure I got all the. So here's what we're doing this Saturday. It's going to be a full day training. We start at 10 o'clock. It's supposed to end at 2, but experience has said we probably don't finish until 3:30, 4:30, sometimes as late as 5. So the one mantra that we work off of is you're going to get way more than your money's worth. What is 3-bar exponential mean? Ooh, I don't know what that means. Yeah, Jim, we can do that. Unfortunately, I'd say we can do that. We can do that some night when we're doing the T-line, because it takes approximately 3 minutes to explain how to use the 3T line. Are there lots of people in the room that trade futures, indices, or mostly stocks? Everything. Mostly in the main room, it is stocks and ETFs. And then I've got an option trading room that is obviously for option trading and futures trading. No stock puts and calls. No stocks puts and calls. What's that mean? Yes, we always show how to use puts, calls, put spreads. Yeah, you can do it on futures. In the options room, yeah, we do futures. I trade commodities during the day, but I trade off the 10-minute chart. I trade soybeans, wheat, cattle, the dollar, the British pound, whatever looks attractive for the day. Oh, so here's our marketing trick. The training session is $197 for non-members. But if you decide to join for $97, then it becomes a $97 session. And you get 30 days at least from being a member for 30 days to see whether it's worthwhile. And I don't try to push things on people. A lot of people say, well, why don't you push candlesticks a little bit harder? You don't seem to promote very strong. My answer to that is, if I show people how to use candlesticks and they can't figure out that the probabilities are obvious, then probably pushing them into something isn't going to be any big deal either. So anyways, all right, now let's go to live charts. Let me see if I can do this with great elegance. Okay, so this is, I had this one up. This is to illustrate the best friend signal and the inverted hammer. For those of you that are fairly new, the inverted hammer is one of the 12 major signals, but it's the least common of the 12 major signals. However, it is also one of the highest probability trades. And this is my own statistical analysis from, I don't know, 40 years now. I can't be. I'm only 45. But very simple statistical evaluation. If you see an inverted hammer and it opens positive the next day, you've got a 95% probability or higher that it's going to trade positive. Or if you see a doji followed by a gap up, that's what we call your best friend. And that's got two ramifications. One, you have a high probability you're going to be heading higher, and two, the magnitude of that move is usually going to be fairly strong. Oh, so and here's another thing that we are going to be going through. Which patterns work most effectively? Now, this is why identifying things like a fry pan bottom is what we're looking at. Fry pan bottom is your big rounding bottom. Now, look at what this chart has been doing. Even though the market has sold off over the last few weeks, A fry pan bottom is not a one-time reversal. It's a buildup of investor sentiment for some reason. Now, a fry pan bottom has very simple results. You can stay long as it doesn't close back below the T-line. That's a high probability factor, number one. Number two, in this case, a fry pan bottom usually doesn't move very much until it gets to the breakout level. So that's why you can calculate that if you were buying this stock right here at around 785, where's our target? Right here where the pattern began. But if it goes up to this level, you're looking at about a 45% price move in a high probability trade. Now that's just to get to the breakout level. Once we get to the breakout level, that's where we expect the big price move. So in a case like this, we're buying, we can hold no matter what the market's doing, as long as it doesn't close below the T-line, with the idea that if it continues higher, got a 45% or greater move, and then if it breaks out, that's where your big move occurs. So I'm going through some of the longs right now. This is part of your J-hook pattern setup. J-hook pattern is a strong price move, and then a J-hook. And notice what happened on DWAC today. That would be a question to ask. How long is a fry pan bottom legitimate? What do you mean legitimate? It's legitimate as long as it stays above the T-line. And what do we expect again coming out of a fry pan bottom? I'm trying to think of one that has worked recently. And I'll have to find one. Oh, maybe I do have one. Let's see. Fry pan bottoms. Here's kind of a fry pan bottom on Costco. You can see the rounding bottom. Now, how long do you hold on to this one? Very simple, as long as it doesn't close below the T-line. Let's see, now I gotta go. So on the, we recommended going short on Stone today. So this is where you, like a walk, okay. Thanks, Jim. This is where you can do your 2+2. Look where this evening star signal occurred. Right there at the 50, failing at the 50-day moving average. That's just that much more enhancement. This is a dumpling top. This is the opposite of your fry pan bottom. A slow rounding curve. And what do we expect coming out of a fry pan bottom? A big, strong price move. What do we expect on a dumpling top? That's where they crunch it down to the, pretty much to the downside. Yes, Bob, and you definitely don't forget them, especially around lunchtime. You forgot to review. Oh, did I? So DWAC, you can see he's got kind of the J-hook pattern. Where would you think the next likely target would be on this one? Well, this is where you kind of add what everybody else was likely watching. But you can pretty much calculate there's a trend channel. You're above the T-line, and notice where it opened today. Opened right on the T-line and traded positive. Now, again, for people that haven't been in here very much before, what that is relevant because nobody has the T-line on their chart. So when it acts like a natural support and resistance level, it's where prices either resist or support, but that's the natural support and resistance. All we've done is add the T-line to identify where that natural support and resistance level is. I could be funny and say, oh my God, the pan I'm using makes better soup. That makes better stir fry beans. Okay. What is the SMA of the green line? This is the 3 exponential moving average, the 3T line. But that's only real critical when you start moving away from the T line. I'm going to try to go back to, oh, I shouldn't do this because I'll goof up. I guess this is a good example. Notice how Tesla moved a good distance away from the T line. That's when the 3T line becomes a little bit more noticeable. And there was a, forget how long ago it was that. I'm not going to go back and try to find it. But we use that as an example of Tesla, because back in April, it just skyrocketed. And everybody in the options room got out at a much higher price, because once you start moving too far away from the T line, then you flip to your 10-minute chart, which looks exactly the same as a daily chart, and you use the T-line rule, that you stay long as the 10-minute chart stays up above the T-line, but as soon as it closes back below the T-line on the 10-minute chart, you close out the trade. Why? Because you've already analyzed that the daily chart is way too far away from the T-line to get ready to take profits. So everything that is built into candlestick analysis is just common sense. I think in December, and I think also in May of 2020, Michael did it. Is there a dumpling top in? No, not really. A dumpling top is kind of a very slow rounding curve. This just happened to be up and down. So here's that strong reversal signal. So what did we need to see to tell us it was time to buy? You need to see bullish confirmation, which never happened. So now what's the T-line telling us? We're still in a downtrend because they could never get back up above the T-line. Oh, I'm keeping us way over time. Let me see if I can run through Roblox. Oh, how did these get on here? Here's your bearish J-hook pattern. Get ready to short this one on weakness. IMGO. We recommended this one because this is what we call a series of dojis. Remember, if a doji represents indecision, get ready for a reversal. If one doji means indecision, a series of dojis means greater indecision. And notice what this did today. Still stayed above the T-line. It means your uptrend's still in progress. Harry, you can put whatever you want to. What you see on my charts is just stuff that I've used for the last 30 years that work extremely effectively. If you want to put the 18 SMA or the 20 SMA, whatever you want, add it onto your chart. If it works, keep it there. If it doesn't work, take it back off. Oh. Okay. You don't, yeah, sometimes I forget stuff. All right, so we can also have added confirmation. The oil stocks are staying above the T-line. VET, Apache. So here's just kind of additional confirmation. If you can see that all the oils are still trading higher above the T-line, That means whatever individual one you were thinking about buying is probably that much safer. I'm going to go to the biggies real quick. We did Tesla. We did Amazon. Amazon's trading somewhere up right about here right now. So the big green candle, I don't know where Snap is. I think the last time I saw Snap was at around the $38 area. So that was a big candle. Ford, though, missed, and it was trading lower after hours. And I think, was it Clorox also announced, and they missed. So you can see that's a bearish J-hook pattern setup. Okay. So let me go through some real quick that look strong. Mod, DXC, there's your doji sandwich, there's your best friend. There you are right at the 200. So this helps you out because you know you've got strong buying, you have a bullish signal. If this trades above the 200, what's everybody else watching? They're waiting to see if it's going to trade up through the 200. Kind of the same scenario on Alcoa. Alcoa is right here at this, out of that resistance level with strong buy signals. It bounced right smack dab off the 50. This is the whole purpose of the visuals of candlestick graphics. Look where that doji bottomed out, right at the 50, which told us they were buying at the 50. If this opens positive, what's it telling us? This buying is not being restricted anymore. Look for wave 3 to the upside. Oh boy, get rid of that. None. AMR, J-hook pattern, can be bought on positive trading. MDGL, this thing is just drives you to drink. There's your doji sandwich. Now what's the, what do we expect, and this is one of the things that we go through constantly, what do we expect after a doji sandwich? More upside. So we get more upside I don't know whether this one. This is what we call a McMuffin. That's your morning star signal. That's one of the 12 major signals. And then that's your doji sandwich. What do we expect after a reversal? The Japanese rice traders have told us it's probably a reversal. What do we expect after a doji sandwich? More upside. So when you've got a morning star signal followed by a doji sandwich or your morning sandwich, we call that a McMuffin, the probabilities are pretty strong that you're heading up, doubly strong that you're heading up. JP, no, that is the wrong strategy at any time. I hear so many people say, oh, I'm going to wait for something to pull back so I can get in. That's called the immaculate execution. When people see a strong price move, they say, oh, I'm going to wait for it to pull back so I can get into a better price. Now think of the rationale of that. That if it's pulling back, what's that telling you about the strength of the bullish trend? Number one, it's not a very strong bullish trend. Number two, what's that telling you about your trading ability? It's saying that it's going to pull back right to the level where you think it's time to be buying, and as soon as you buy it, it's going to go turn around and go right back up again. That's wishful thinking. What we're looking for is if we see a pattern setup, I can be buying right here, knowing that the magnitude of that candle is going to be the same magnitude as that candle. I want to be buying into strength, knowing that that would be confirming the signal that I expect. And that's, why didn't that not work? EPWP, ADTN, kind of your rounding bottom, and I had a star next to that. Why did I have that star next to that? Oh, because there's your trend kicker signal. Opened here, closed here. Then they gapped it up and went in this direction. That provides a very strong probability of a breakout. Alcoa, we're waiting for it to break out through that resistance level. PBT, we're waiting for it to break out through this resistance level, again, with your little doji sandwich. Whose handwriting is this? This is your left-right combo, a doji followed by a bullish engulfing signal. This is what we call 2+2 analysis. Look at all the elements that we can put into the reason that this is a good buy. One, look how it kept supporting right here on the 50. Did a hammer, did a doji, did a bullish left-right combo, and when it opened positive the next day, what was it telling us? It was telling us they were confirming the left-right combo, number one, and telling us, number two, the T-line was not acting as resistance anymore. The probabilities are pretty strong it was going to be heading higher. One more on the long side, and we'll show some shorts that are going to work well. So LQDA, I think that was more of a, there's your doji sandwich, there's kind of your trend kicker signal, there's your J-hook pattern. This is why you want to learn what the signals are and how you can apply those in conjunction with the development of a good strong pattern, again, improving your probabilities. ON, hanging man, gap down, look for a bearish J-hook pattern on weakness on this one. Monday, there's your bearish left-right combo, close back below the T-line. What do you expect off of this one? Wave 1, wave 2, going into wave 3. Big C, bearish engulfing. If this opens lower, wave 1, wave 2, going into wave 3. So this is, again, is not rocket science. This is just identifying the patterns that humans work or come from human nature time after time. Sell signal closed back below the T-line, bearish J-hook pattern. I mean, there's dozens of these today. Whoops. Can't even read my own handwriting. There's a failure at this level. Evening star signal. Look for more downside. RUN. Look for more downside. Bearish J-hook pattern. Robles. So there's at least, I quit after a couple dozen of these just because there were so many, which meant if you're doing your scanning process, common sense says if you're finding many more good short positions than long positions, then likely the market's indicating the sellers are in control. Don't buy tech only, quick moves in and out. Oh, Bill has ripped after hours. Did they come out with earnings? So here's the other part of that equation. Of what would you do to go short on this one? obviously you don't want to see it opening up here. You want to see it opening lower. Okay, I think that's about all I've got. We're going to be going through price movements that are extremely high probability. This is a J-hook pattern, which we can better define as a bobble breakout. Notice it came up, failed right at the 50. Everybody could see that. When it pulled back, what could we see? We could see they weren't closing it below the T-line. You could be buying on this day because that tells us we have a J-hook pattern. And where do you think everybody's going to start coming in? They're going to start coming in because they were buying if it came back up through the... Okay, so I guess with that, just keep finding. There's your bearish kicker signal at the 50. That would imply your downtrend is still in progress. So we are going to be going through the strong signals and patterns that produce extremely high probabilities, not only of being in the right trade direction, but in trades that are going to produce much more excessive profits than just merely a downtrending stock in a downtrend or an uptrending stock in an uptrend. Honeywell, let's see. Even though not in oversold, would you still heed to the kicker? Not in oversold, meaning not in overbought. Yeah, the kicker signal doesn't have to be in any condition of the stochastics. The kicker signal is your strongest individual candlestick signal. You can trade that no matter where the stochastics are. Okay, Bill had earnings. Okay, all right. Okay, Roblox is up. A lot of them came back up after the Amazon. Is it up above? I can find it here. That's not what I wanted to do. That's what I wanted to do. Bah. Well, what's going on here? Something's gotten locked up. All right. What do you scan to identify the stocks of trade? Very easy, DS. All I have to do is put the different scanning, and I don't even have to do that anymore. I use Metastock or TC2000. Let me see if I've goofed this up somehow. This is only giving me regular hours. I don't know what I have done to... but all I have to do is put the stocks that in my trading universe, which are stocks greater than 5, because I want to be able to margin if I want to trade them, and stocks trading more than 200,000 shares a day. That takes my trading universe from 11,000 down to about 3,300. Then I can just sort them by which ones had the biggest percent price move today, either to the upside or the downside. And going down through those charts, which if you're just visually scanning them, I can go down through 100 charts in probably about a minute and a half. And out of that minute and a half, I'm going to find 3, 5, 10, 15 good charts to look at again. So I put them on my watch my bucket list, and then I go back and see which one of those are the best. Usually, going down through the first 50, I'm going to find 10 good candlestick reversal signals or buy signals. So when we do our scanning session in the members area, it's basically just getting ready, getting all your scans set up. All you have to do is refresh them. And in less than, if you don't know what you're doing, in less than 20 minutes each afternoon, you're going to find the best trades for the next day. Once you start learning what you're doing, you can probably do that in 7 to 10 minutes. What I don't want to be doing is spending hours at night trying to figure out which ones the good trades are. Using these scanning techniques, you get can get that done in a matter of minutes. Before I had all the scans in place, I was SOS trading when it first got started in Houston, Texas in 1999, year 2000. And every Saturday I would go over to the office building, which on Saturdays they didn't have the air conditioning on in Houston in the summertime. And I would sit there in my gym shorts, and that's about it. It was not a pretty picture. And I would go through chart after chart for probably 3 or 4 hours to come up with the best trades. Once I set the scans up, and now they're everywhere, you can do it in 10 to 20 minutes. Can the bullish kicker be bought even if it hasn't closed above the T line? Yes. Eric, hold on to your individual ones until I tell Jim to do the double line. So are there any other general questions on candlesticks? Oh, somebody was private messaging me. Yes, we start at 10 o'clock on Saturday. Bring your hot chocolate. You don't even have to get out of your pajamas. Like Groucho said. This morning I went out and shot an elephant in my pajamas. How he got in my pajamas, I don't know. Oops, I didn't scroll down fast enough. That's up to each individual's risk reward. Jim, no, it's probably it's much more refined, using combinations of signals, patterns, and confirming indicators. So if I think there's an earnings report coming up and I can't tell what they're doing going into the close, I don't trade it, or if I'm in a position, I'll come out of the position and wait to see what happens after the earnings. Yeah, hold on to, all right, I guess, whoops, still didn't scroll down fast enough. TC 2000, yes, is a good, yeah, oh, that's right, in less than the, but I couldn't even flip it over to the post trading, so if something was goofed up, I have to close it out so I could refresh it. Are your scanning studies on Thinkorswim? Yes. So for a scan, look for stocks above $5, biggest price move for the day and volume. At what level? I usually use over 200,000 shares a day. For 2 reasons. Because I want to be able to get in and out of a position easily. I don't want to sit for 5-10 minutes trying to get a position closed out so I can move on to the next one. And the more volume, the more fluid or the faster your signals become evident. It's just up to you. Yeah. Remember, the futures mean nothing at all right now. It's what they're doing at 10 minutes before the market opens tomorrow. TC2000 is mostly U.S. stocks. Metastock will do all markets. Asian, European, either Metastock or TC2000 are. Now, a lot of people say, well, can we do our scans? Whoops, you just asked that. How do we do our scans on Thinkorswim? You can. But here's the economics of trying to do scans on trading softwares. Their money is not made by perfecting their scanning softwares. I would rather pay the extra $45 a month or $90 a month to get into TC2000 or Metastock because they're set up to do the scans. They're much more effective and they're much faster. So depending on how much time or what you think your time's worth, they pay for themselves dramatically through the month. How do you run your stop losses? Just above the T-line. Jock, that's based upon where we are. If I was shorting this stock tomorrow and the T-line was down here and I shorted it here, I wouldn't want to see it close above the T-line. And we can do a session pretty soon on stop losses. I've already got that written down. Okay, I guess, Jim, let's go ahead and do the double line. And in 4.3 seconds, do the next double line. NVIDIA traded lower, but it was trading back up after hours. So you have to see where it opens. If it opens lower tomorrow, it's probably coming back down to test the 200. Goog, that's probably, I don't know what to tell you there. That's probably coming at least to test the 50. And Advanced Micro, again, these are all based upon the close. Going to have to see what happens based upon the strong earnings of Amazon and Snap to see what they do to a lot of these stocks in the morning. But based upon this chart, if this opened lower, it's coming back at least to test the T-line. Penn, nothing. I probably wouldn't be long or short on this one. That's kind of a nothing chart. As a matter of fact, if it opened lower, I'd probably be more apt to start thinking about going short. Axe, nothing there yet either. You need to see bullish confirmation. Obviously, you're seeing support here. It looks like it was a bullish engulfing signal today, so you could be buying this one on positive trading. Lab D, J-hook pattern, which means the biotechs are in a downtrend. So you could be buying this one on positive trading. EDV, the CDEV, nothing wildly exciting. All you can do here is stay long as it stays above the T-line. Vail, stay long as it stays above the T-line. If I was going to be a buyer, it would be above that level right there, telling me that my J-hook pattern is now telling us we're heading up here to the 200. Hood did a belt hold signal the other day. And it stayed up above the T-line. There's your belt hold bullish engulfing. One of your, that's a very strong reversal. That means they wiped out a lot of sellers. Now you have less sellers in the way. you can stay long on this one as long as it stays above the T line. That's CI. That's a bearish kicker signal. And that's kind of your dumpling top. So what do you expect from a dumpling top? A strong down move. What starts a strong down move? A bearish kicker signal. That one I'm going to put a little star next to because that might be one of the ones to go after tomorrow if the markets are opening up lower. Upstart, another one that you could be going short on. Not a true sell signal, but if it opens lower, you've got a bearish doji sandwich confirming your bearish J-hook pattern. A-frame, another one, same scenario. You could be shorting this one on weakness after the doji. $5. That's kind of a nothing chart based upon the close today. I would probably be someplace else. And Home Depot, that one I would have closed out today just based on the probability factor that if it closed or traded back below the open and then closed below the T line, that's not a good chart setup. Lows, kind of the same scenario. Stocks. Get ready to short this one if it opens weaker, or at least telling you that whole sector is trading weaker. ITB, that's the home construction, again, selling off. Toll Brothers, selling off. Beazer Home, that wouldn't be long or short this one. We can do a session on scanning, yes. XBI, the biotechs. I'd get ready to short this one on weakness tomorrow. We did Hood. Whoops. This one you get ready to short. Look at your bearish left-right combo. You can short this one on weakness because that would be giving you a bearish doji sandwich, which would then be a bearish J-hook pattern. This one you can be shorting. Oracle. If you're long, it has to stay above the T line. I wouldn't want to see it traded all below today's open. If it does, it's going in the wrong direction. Hood, you stay long as it stays above the T line. And net, I told people not too long ago that, I forget where it was, that you could sell everything else in your portfolio and buy this one, but then all you'd have is nothing but net. You stay long as that stays above the T line. This one you can get ready to short, the SPY. Stay long on this one, nice J-hook pattern in progress. You stay with this as long as it stays above the T line. And Marna, if you're long, you get ready to close this out. If you didn't close it out today, get ready to go short if this opens weaker tomorrow. Zillow, if you're short, stay short. Etsy, stay short. Figure you're going to be continuing that downtrend. AMGN. That's kind of a nothing chart. I probably wouldn't be long or short. There's no direction to it. Lucid could never get started again. You could be shorting this one on weakness. Again, your bearish J-hook pattern. Let's get rid of all those. Well. Wave 1, wave 2, wave 3 down here somewhere. And Chewy, you can short this one on your Dagwood, which would be at a lower open. Very doji sandwich after an evening star signal. AMAC. You could short this one on weakness. Started trading lower near the close today. You could short it. It's not your best short because there's really no direction, but you could short it. Which means there's probably a lot better stocks to short. Sophie, if you're short, you stay short. Did we do Marna? Yeah, you can short this one. XLE, you stay long as long as the oils are acting strong. We did Sophie. Did we do XLF? Oh boy. I would stay long as it stays above the T line and the 50. It's not unusual to come up through the 50, come back and test it. If it does support it, then you could start going long, aggressively long. KOS, just stay long, look for it to break out. GE, you could buy it. It's not a very exciting chart. Obviously, an institutional trader. I would stay long as it stays above the T line. QCOM, it was whipping around. I forget where it is now, but is it up after hours? The fact that it gapped down and stayed below yesterday's open is not a good sign. If you've stayed with it, it better open up pretty strong tomorrow to stay long. Coin, you can short this one. The downtrend is still in progress. Did we do Upstart? You could short this one on weakness tomorrow. UPS. You stay long. I'd have a safety stop right here. If they came back down through there, they weren't taking it up. They were still in the profit-taking mode. But right now, you look for a 45-degree. FedEx, not doing very well. Is that Trade Desk, Lou? Trade Desk, you can short this one on weakness. The Qs, short on weakness. So we did FedEx. Netflix never got started. And here's another example. If you're in an uptrend and they close it back below the open of the previous candle, close it out. You can always buy it back, but that close below the previous day's open is pretty much telling you the bears have taken control. Yes, RC, and that's basically the reason why the first analysis you do every day is the market itself. Which way is it going? If they open the Dow lower tomorrow, that means you're still in a downtrend because they failed at the 50. Didn't we do this after the close, JB? This one you can go short tomorrow. Very. Go short tomorrow. Shopify. Go short. Especially if it opens lower, giving you a bearish doji sandwich, bearish J-hook pattern. I'm sure we did this one after the close, which means it hasn't moved since then. If you're long, stay long as it doesn't close below the T-line. 183, QCOM, all right. Macy's, nothing. That's a sideways chart. Probably wouldn't be long or short. QCOM, 183, which means it's right about in here. So that one still would have to open positive to want to stay in it after coming to that close to the previous day's open. No, the red line is the 200-day moving average. The blue line is the 50-day simple moving average. Workhorse, nothing here. You're below $5, so you can't even short it, but I wouldn't be in this one at all. Crisp, another one you can short on weakness tomorrow. And CSTL. You can stay long on this as long as it stays above the T-line. If I was buying it, I'd wait for it to get up through this level. Short this one on weakness. BABA. That was path. This one's BABA. BABA, I probably wouldn't be long or short. That's kind of a nothing chart. Okay. Definitely need to see how they open everything tomorrow morning. Again, right now the presumption has to be as long as you have closed below the T-line, assume the downtrend. But because of the whipsaw nature of the market right now, you need to see what the market does. All right, the Asian markets are up. All right, I still need to see how they open things tomorrow. All right, everybody. Hope to see some of you Saturday. Remember, it's going to be cold and rainy, so it's a good place to drink lots of hot chocolate and learn stuff. All right, we'll see everybody bright and early tomorrow morning in the chat rooms. We'll see.